In March 2023, Suzlon shares were just worth 8 rupees, whereas now the stock is trading at levels of 64 rupees per share. Now that amounts to an almost 700% growth in just over a year. Will Suzlon see such growth ahead, and does it have the capability to provide returns? Well, let me analyze it for you. While the company's stock has fallen around 10% in the past month, it has surged more than 40% in the past 6 months and over 60% in the past 1 year. Now let's break down the company's business. Suzlon Energy is one of the only 2 wind EPC suppliers in India. Incorporated in 1995, the company manufactures wind turbine generators, a space where it holds 33% market share. With a total manufacturing capacity of 3.15 gigawatts, the company has helped install wind capacity totaling 20.9 gigawatts globally, which includes 15 gigawatts in India itself. The company also operates 2 other divisions. The Operations and Maintenance Division provides services for the wind turbine generators the company makes, while the company's Foundry Division specializes in manufacturing castings and forgings for the industry. In terms of growth opportunities, the company benefits from India's strong push for renewable energy, which targets 140 gigawatts of wind capacity by 2030. Suzlon Energy's wind order book has also grown 3.2 times from September 2023 to 5.1 gigawatts currently. The revenue potential of this order book stands at around 30,000 crore rupees, since the company earns 6 crores per megawatt. The company also plans to complete the entire order book in the next 18 to 24 months. The Nuvama Research expects the company to execute 1.4, 2.4 and 3 gigawatts worth of orders in FY25, 26 and 27 respectively. The company also expects to commission higher number of orders in the second half of FY25 itself. Suzlon Energy's management is also exploring opportunities in other new energy sectors like energy storage, and analysts expect the company to remain a key beneficiary of rising government renewable energy tenders. Morgan Stanley expects the company to also improve its market share to 35 to 40% by FY27. But there are some risks as well. Suzlon Energy is not completely insulated from the execution risks related to land acquisition, project delays, lack of renewable energy transmission evacuation, and low auctions of new orders. In terms of financial performance, the company's performance in the first half of FY25 has been strong where compared to the same period a year ago. While maintaining margins at around 15%, Suzlon's revenues, EBITDA and net profits grew 49%, 56% and 148% respectively on an annual basis. As for the 3-year financial performance, Suzlon Energies has remained fairly stable, but the company has seen its margins expand from almost 13% in FY22 to over 16% in FY24. The company also saw a turnaround in terms of profitability, as it posted a net profit of 600 crore rupees in FY24 compared to a loss of 200 rupees in FY22. When we talk about financial expectations for FY25 as a whole, well, average Bloomberg consensus estimates indicate that Suzlon Energy's FY25 revenues and net profits could grow 74% and 123% respectively on an annual basis. However, margins could moderate as execution ramps up. Coming to valuation, Suzlon's current price to earnings ratio stands at 127 as per Bloomberg. This is higher than the historical 5-year average of 80.15. However, it is key to note that the company's valuations are expected to decrease or moderate to 57.95 in FY25, and this indicates higher financial growth. Lastly, the stock is being actively tracked by 5 analysts or brokerages currently. 3 of these analysts suggest a buy rating on the company, while the other 2 recommend a hold, and it has no sell calls. The average 12-month return potential stands at 19.8%. So what are your views on the stock, and what other companies do you want us to analyze next? Write down to us in the comments below and stay tuned to NDTV Profit for more.